Brennan, and I am the Risk and Internal Control Officer for Siemans Corporation, bless you. And I'm going to be teaching along with Professor Lou over here, who is finishing her thesis in her PhD program here at Rutgers, this course in Advanced Auditing and Information Technology. This is going to be one of the most important courses you're going to have. Yeah, let me show you here. Well, first of all, let me do this little thing here. This is my little icebreaker here, but that may not work. But, you know, there's always risks. Everything in business is about risks, and we have different risks that we have. So you're out in a desert island by yourself, and you see your salvation come in with this little box here. But there's danger in the way to get to that box. So you got to think about, how do I become innovative? And so I don't know why you have a saw on the island, but you find a little saw, and you saw down the tree, and you think you're on your way to solving your problem. You get over there. You pick it up, you open it up, and it's a hammock that needs two trees to rest on. So that's sometimes, you know, that's sometimes how life works. Okay, first of all, everything we do in auditing and accounting, and I'm assuming everyone has a basic background in auditing from the first class, right? You all had Professor Brown for the first class, and we're going to draw on that thinking, so that's not out the window. This is just the next level of that. Okay, so you know, the concepts of the effective design of a control and the effectiveness of a control and sampling and all these other things that you learned are still applicable. But all auditing and really accounting comes from a standpoint of risk, okay? And what is the risk? And we only have controls and we only have auditing done because of a risk, okay? So what's the risk? What's the status of compliance? Are employees doing the right thing? How does your organization govern itself? Can you see in this picture any risks? Is there any risks you can see in that picture? It's a little far away maybe. What do you see? Performance-enhancing drugs. Yeah, that's one a lot of the cyclists do. How about the fact that this guy has no back wheel on his bike? That's a risk if you're going fast, right? So I don't know if you saw that, but that's an interesting one, that whole performance-enhancing drugs in the biking industry, you know. So, okay, so why does auditing need to change? Okay, let's talk about some of those reasons. Okay, and I'm going to give you what I hope is a compelling picture of why that is. Well, today most controls are monitored manually. Critical controls go untested because we only do them periodically. Control breakdowns are identified long after they occur. The average fraud goes on for about 24 months before it's found. 24 months, that's 2 years before they find them. And we don't find most of them. CFOs sign off on financials with imperfect information. We got excessive auditing and compliance costs. The company I work in, we spend $100 million a year on auditors. We have 450 auditors. We have external auditor fees of $50 million or so. You know, so we're it's a huge expense for any company, even a small company. You know, the engagements. The public accounting firms bill out at $500 an hour for bill outs. They won't pay you that much, but that's what they're billing out at. Unnecessary risk and fraud, wasted time and effort, inefficient business processes. So those are some of the reasons, okay? But there's more. There's things like this, all these things that have happened, and you still read about them, right? They haven't stopped. Enron, WorldCom, and now more recently, all kinds of companies falling into trouble. So what it tells us is we're not getting there. We're not in control, if you will. That's the whole idea, okay? And it continues. I'm ashamed to say, but the company I work for, we got and this is public information, we got a $1.6 billion, that's a B in billion-dollar fine from the SEC and the DOJ for corruption. Didn't happen here in the U.S., but it was over in other countries. And in 1999 in Europe, you could take a tax deduction for corruption, for bribery. You could write off your bribery costs as a tax deduction. Seriously. And we probably spent another $2 billion, that's a B in billion dollars, remediating just that one fraud. And it almost put us out of business. Okay? Enron, Arthur Andersen, you know the stories. Okay? So this is really costly. And countries that have corruption have a 17% lower GDP than countries that don't. So corruption is a terrible thing. But that's only one kind of fraud, and it's not the most prevalent fraud. Things like asset misappropriations and earnings management and those kind of things are the bigger frauds. Okay? So we got a problem. Okay? Now let me highlight this for you a little bit. This is think about this, and you learned this in your first class. We do non-statistical sampling. Okay? So we take a sample of 30. We is the accounting profession, internal audit, external audit. We take a sample of 30 in a population of 25,000, and we think we're going to find things. If we took statistical samples, we'd need to triple the number of auditors we have just to do a statistical sample at a confidence level. So we're just arbitrarily taking, I think it's ridiculous. We have 25,000 somethings, and we take a sample of 30, and we think we're going to find things. And not to mention, it's a periodic sample. We only do it once a year. Okay? I want to read for you. This is an audit report from the PCAOB for one of the big 4 firms. And I won't mention the name of the firm, but it's on the front of the report. And this is public information. You can get this. And this is based on 51 companies. Who knows what the PCAOB is? You guys all know what that is? Yeah. The Oversight Board, right. They basically audit the firms, the audit firms. Listen to this report, okay? This is from 2012, and they do another one every year. Most scathing audit report I ever saw. It says, the firm failed to sufficiently test the issuer's assertions existing for the type of services and sold as multiple element arrangements, hot topic for the SEC. The firm failed to test operating effectiveness of any controls over the accuracy of manual generated shipping information. The firm failed to follow the following respects to obtain sufficient appropriate audit evidence to support its audit opinions on financial statements and the effectiveness of internal controls reporting. The firm failed to test the completeness of certain system-generated data and reports that it used to control. The firm failed to perform tests of details that were specifically responsible for the risk of fraud that we just talked about, and identified related to the reserve for sales, discounts, and allowances. The firm failed to sufficiently test controls over the valuation of deferred assets and the accounting for disclosures of variable interest entities. The firm failed selected testing that included the review of journal entries, but the firm's procedures did not include the testing of the effectiveness of the entries. The firm's tests of certain review controls over revenue, deferred revenue, accounts receivable were insufficient. This isn't just they need to improve here. This was they failed. And it goes on. The firm failed, the firm failed, the firm failed. It's the most scathing audit report I've ever seen. And I've seen a lot of audit reports. And so what it says is, according to the PCAOB, we're not doing the job. We're using non-statistical sampling, and we're not getting the job done. You guys, I don't know if you have a chance someday, read this book. This is called The Smartest Guys in the Room. It's about the people at Enron and what they did. And why were they able to do it? There was the control environment was totally inadequate. And yet they won an award for their compliance program a year before this all went down and all these people lost their jobs. They won an award. Okay, and then another one is that I shared with you, and we're going to cover this in the class. In fact, I may have a speaker coming up that is a fraud investigator that to share this. But fraud, according to statistics based on 2,000 actual cases, is 42% of all fraud is collusive. That means we're working together. Wayne and I are in this together, okay? And almost all financial fraud is collusive, meaning more than one person's involved. And so what's our whole control environment based on? How are controls developed? They're based on what's called a 4 eyes principle. So we have 4 eyes looking at what's going on, two people looking at what's going on. Doesn't help for collusive fraud. So that means that the whole control environment, the thousands of controls that you're all going to go out and test or implement, if you go to work for the Big Four, you're going to test them all the time. They're not even the controls that are going to stop most of the fraud that's going on. So we got non-statistical sampling. We're failing at doing the job as per the Oversight Board. and we have 4 eyes. We have the wrong control process in place. So we're not getting the job done. It's that simple, you know. And yet we pay a lot of money for these services, and we do a lot of things, but we're really not getting the job done. And I don't think, like the MBA students asked, I don't think we want to admit that, because that's an indictment. I'm happy to admit it because I'm convinced that we're not, and that we need to do some things differently, or we're going to continue to have Enrons and WorldComs and corruption and all these other things. And what the ACFE says, based on ACFE's Association of Certified Fraud Examiners. By the way, I'm a certified fraud examiner. That's one of the things I have. I have a certification in that. So, the ACFE is the one real empirical group for fraud. If you want facts about fraud instead of impressions about fraud, because fraud's elusive and most people don't know about it. But they say the only way to stop collusive fraud is to create a perception of monitoring. That's someone's watching what you're doing all the time. Because that takes away, in the fraud triangle, the opportunity. Now I don't have the opportunity to perpetrate or conceal a fraud because someone's watching. So how does that work in practice? So at Siemens, we monitor everything that everyone goes to on websites in the company. Okay? So I have no temptation to go to a porn site or run a separate business, at Siemens while I'm working, because I know they're watching that with technology, and they're doing it on a continuous basis. But if you're in a company and you know that they're checking 10% of the expense reports, just to make sure the receipts match the expense report, what's the risk of putting another $25 on that meal or whatever, because they're not going to find it. They're doing non-statistical sampling, so people do that math. And these aren't scumbags, by the way. These are people like you and me. The biggest perpetrators of fraud in any company is accountants like you and me and C-level executives. And they're your neighbors. And they have great rationale for doing these things, And we should never put anyone in a position where they can perpetrate or conceal a fraud, no matter how good they are. In one company I worked for, I was involved in an IT audit of an employee who embezzled $350,000 from the company. The employee was an 18-year employee. The employee was doing fraud investigations for the legal department and helping with them. And that employee, and this isn't unusual, by the way, that employee, all they did was a very simple thing. They had a travel card, which I have, and for the business, an Amex card. And they were the liaison in the accounting department between the bank that issued the cards and the company. And so whenever there was a kickback, a legitimate kickback, where you get certain volumes you use in your cards, you get refunds, or there was a return, or there was some type of account adjustment, the bank would call this person and say, where would you like me to put that money? And they'd say, oh, just put it against this account, which happened to be their card account. And then they went to an ATM and took out the money against their account. There's no control on that. And they embezzled $350,000. And they didn't get caught by the external auditors because they only find 3% statistically of the fraud. They didn't get caught by the internal auditors because they only find 14% of the few frauds that we do find. They got caught because somebody that they were training in their job that was going to replace them, they treated like crap because they didn't want someone to replace them when they went on vacation. And this person was upset and did some digging and saw that they had all these withdrawals for $350,000 over 3 or 4 years out of their account and never traveled. And so, they got caught. But happens all the time, And you're not going to find that stuff by going in and doing statistical sampling, in fact, we didn't even have a control on that. So my point is simply, we're not getting the job done. And that's why we need you out there to use these things we're going to show you to get the job done, okay? And I'm serious about this. I mean, this is alarming. It's alarming to me because I know what's going on in Rutgers, in my company, in any company, and we're really not getting at it. Most people won't admit that, but it's true. So for these reasons, we're using non-statistical sampling. Our own oversight board saying we're doing a terrible job. Not just a terrible job, we're really failing. The word failure in there means significant failure. That's not just, oh, it'd be nice if you did it a little more thorough. And our whole control system is based on, doesn't address the most prevalent type of what could go wrong, and that's collusion. Okay? So, and then you have this sort of independence issue, I swear that the best of my knowledge, which is pretty poor and may be revised in future, my company's accounts are more or less accurate, and I've checked these because, what's the biggest conflict of interest there is that, we pay, the people that are holding us accountable, we're paying millions of dollars to hold us accountable. I mean, it's kind of the fox is watching the hen house here, So, yes, Michelle. Mm-hmm. Yeah. Bless you. Right. Yeah. And that's a great point. And the motive, think about the motive for earnings management. I work and live with you guys every day. I spend more time with you than with my family. And we're in this department. This is called accounting department. And all I'm going to do is mess with these provisions a little bit because we had some bad quarters. And I just want to make sure our stock doesn't tank and you all lose your jobs. I mean, I care about you guys. I'm helping you out. And it's going to come back in the next quarter. It's not a big deal. So I'm going to do that. Or my grandmother's deathly sick, and she has no insurance. And I'm just going to borrow this money from Siemans, and I'm going to give it back later, when my grandmother gets better. I mean, these are the kinds of rationales that very rational people, go through, Or I work at Siemens, and Robert's making $100,000 more than me over at GE, and I'm just taking what I deserve. I mean, I'm working a lot more hours than Robert is. I'm doing a heck of a better job than Robert is, and he's getting paid $100,000 more than me. Now, I'm just taking what I deserve from the company, right? Just how about the corruption of power? Lord Acton said power corrupts and absolute power corrupts absolutely. So put someone in a position of power. Yeah. What's the tone in the company? The guys at Enron, they were happy and bragging about what they were doing with what they called creative accounting. Yeah. Yeah. And justified desperation. My grandmother's sick. I'm saving my grandmother. Mm-hmm. Yep. 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 Right. That's the opportunity point. People will only do this, and that's why I said earlier, never put any, think about it. We do it to movie stars, right? We say, you are so wonderful. You are so amazing. And we give them, we put them on a pedestal, if you will, and we set them up to fail because they have the opportunity to do whatever they want to do. And if you put children or people in that position, you corrupt them. That's history repeats that many times. The way? Good. Yeah. Any other thoughts? Is what? The lack of continuous monitoring. Mm-hmm. As you mentioned earlier. Mm-hmm. If that's missing, people are going to be tempted to do. Yeah, sure. Absolutely. Absolutely. And again, the reason that accountants and C-level executives perpetrate most of this stuff is because what do they know? They know when the auditors are coming, what they're looking at, how long they're going to be there, and when they're leaving. So, for example, in SAP, and I'm going to keep talking about some of these system things too, if I have super user access, that means I basically have unbridled access to do anything I want in the account. I can write an ABAP, that's the language that SAP's written in program, that says during the accounts payable, accounts receivable transactions, I want you to take just the cents off of every transaction, the pennies off of every transaction, and send it to an e-transfer account, transfer it at 2 o'clock, turn off the security logs, transfer it at 2 o'clock in the morning to my account in Geneva, Switzerland, and then erase everything you did and turn the security logs back on. And I can write an ABOP to do that, and you will never find it, unless I have some type of continuous monitoring, and I would see it. And one of the analytics would be I see a break in there, someone turned off the security locks. But those things happen, and all you got to do is know how to do the programming to do it, and you could steal billions, because, by the way, those cents add up to millions every day for even a mid-sized company. Okay? I mean, this stuff is going on, I'm telling you. And we're not finding it because we're not using technology to monitor. Or we're not using it enough. It is being adopted, and we'll talk about that later, some of the things. Okay, good. You guys get kind of the picture, right? And I'm not a doomsdayist, by the way. I'm an eternal optimist, but I just want you to understand that there is a problem. We're not in this class solving a problem that doesn't exist or addressing a problem that doesn't exist. Okay? Here's another example is people get held personally accountable for this. I told you we got a $1.6 billion fine. That's a lot of money. And the estimate of what it would be, if you think about it, 5% of revenue is like $3.5 trillion in the world GDP. This is an example that actually happened with Morgan Stanley, and this is the owner of the software company that might be here in the class that does this for. But the Justice Department, there was a corruption issue, and the Justice Department absolved Morgan Stanley, but because it did have a continuous monitoring or an automated monitoring system, and they only went after the individual that did it and indicted him. Okay, this was over in China. Okay, so let me talk about what might look differently here between. And by the way, what I wanted to do today, if we get time, is I want to finish this to give you an idea of where we're going, and then if we have time, by popular demand, I'm going to share with you the best training I ever had. I've been to all kinds of charm schools and all kinds of training, but the best training I've ever had was on energy management. And I know you guys are burned out doing this program, and it's tough. And this is some great training from the Human Performance Institute in Orlando, Florida, on how to effectively manage energy in order to do school, do your job, and stuff. It's a great training thing, and it's where they take professional athletes like Sampras and tennis players and others, and they train them. They take them from being number 200 on the tennis circuit or golf circuit to being number 1, and they don't teach them anything about golf. They teach them how to engage intensely and then disengage for success. So I'm going to share that with you if you're interested. Would you be interested in that? We have time? Yeah, okay. So we'll talk about that too, and we don't, we'll finish it in another class. But so what are we talking about when we talk about traditional auditing? And when I talk about auditing, I'm not just talking about auditing here. I'm also talking about risk management, and I'm also talking about reporting. So automation is not just for auditing, but it's one place where we want to apply it. So what we have is traditional auditing is, as I talked about, you observe events as part of a periodic process. You manually report the findings. You do sampling, and in most cases, non-statistical sampling. You capture data from each process separately, and you perform mostly manual tests and interviews. That's the traditional go in and interview someone. In what we want to promote here is observing events closer or when they happen, real time. So we monitor in real time, okay? Automatic alarming when exceptions occur. And this is a very important principle that will be on the exam in this class, is this idea of not just having analytics. You know what an analytic is? You're a math major. Analytics are, anything that you can put into pseudocode, you can write an analytic around today. So for example, if I say, you know what pseudocode is? That's like, if this, then that. So if a C-level executive, who I get from a table, makes a journal entry at month end for more than $10,000 or makes more than 5 of those journal entries, I want you to send me an alert. And that alert is going to be a closed loop escalated alert, meaning that if that isn't corrected or dealt with and satisfied, it's going to escalate to the next level. Really important, because sometimes we go out and we do these analytics and we get thousands of records and false positives and everything, and we don't know what to do with it. And we don't have the resources to follow up on it. So this idea of closed loop alerting, this alerting is really important because you don't have time to monitor tens of thousands of records. And we'll show you that when we talk more about the software. So alarming is really important. Population data. We are following everything. Every website, every employee in Siemens goes to is monitored electronically to make sure it's not a porn site or some inappropriate site. Integrating data across multiple and distinct processes. We look and monitor end-to-end processes. That's one of the problems today. I go in and interview people for an audit, a traditional audit, and I say, Anna, tell me about your accounts payable process. And Anna says, well, I only do, this matching process. That's all. I don't know what the rest of these people do, And so now I can't audit because no one knows the process. Great example here at Rutgers, right? I just teach this one little course, right? And I come in and I try and get registered. And nobody knows what the other person does with this fantastic system we have. And we're here educating the best and brightest. I told the presidents of Rutgers this. We're educating the best and brightest to run major businesses out in the business world, and we can't get a part-time lecturer registered over 3 years. So I'm like, and it's not that we don't have a good system. It's probably a fantastic system. It's just that no one knows the end-to-end process. They're all staring at one little piece of it, and they say, oh, you need to go talk to Jackie. No. Jackie says, no, you need to go talk to Caroline. No. Caroline said, you got to go back to Jackie. She does that, and yeah. Is what? Yeah. And that's and that's part of the problem here is people really don't want to do this stuff because then you really could simplify things. If I put automation in, I don't need 450 auditors traveling 80% of the time. But the thing is this, and I want to be clear about this. I'm not saying this is a panacea. This is what you apply to a lot of the routine things so that you can get into the more Enron kind of frauds and the more sophisticated time. I can spend time looking at human behavior and what people are doing that's maybe outside the system, okay, with money laundering and things like that. But we don't have time to do that because we're so busy, ticking and tacking and getting little things. You're going to do this. You go into public accounting, you're going to be, or internal audit, you're going to be sitting there going, got my MBA from Rutgers to check this box against this box. And that's not what I want to do. And that's another motivation for you. You want to do something interesting. You guys live on these electronics here. You don't want to be taking paper and matching this to that and reading manuals and everything. So good thought. Yeah, just speak up. You don't even need to raise your hand. You can just say, hey, I think you're wrong. Performing repeated automated tests with low variable costs. Okay, so this is the kind of stuff. This isn't complicated. This isn't This is just sort of saying, hey, why don't we use the technology that's out there? And then we get into this discussion about what's the difference between continuous auditing and continuous monitoring. Okay, and I'd like you to think about this, and this will be on the exam too, holistically. Okay. So it doesn't matter if you're doing monitoring in order to audit. In fact, the biggest gain is using analytics to make sure your strategy and your operations are working best, not auditing, But it's auditing's a place to apply it. So the difference is that continuous auditing is an independent review, meaning I got to be independent from the business I'm auditing, by an external or internal auditor, a qualified auditor, using a variety of automated tools. Okay, continuous monitoring is, an assurance function at the pleasure of management, an assurance or validation process at the pleasure of management that isn't necessarily independent and may be monitoring everything. But the key is that we're going to use the same tool, use one tool, because in fact, Dr. Vassarelli here, who was an innovator of this stuff back in 1989 with AT&T, they had a billing system, and they put a continuous monitoring process in on the billing system, and it was fantastic. They found all kinds of things, and they spent money doing it and found all kinds of problems and corrected them and put monitoring. But the problem was that at the time, AT&T had 100 billing systems, 100 different billing systems. So now you'd have to take the same, application and rewrite it for this different billing system. So the idea is when you invest in this, you have one software, and we do it for all types of monitoring, for business reasons, to make sure people are following processes, for assurance, for compliance, for legal, for HR, for everybody, and for auditing. Okay? Now I'm leveraging the technology. And now the tools like Oracle and SAP, and we'll talk about these, we have them coming in, or SAP coming in, they built in these modules into here. I'll show you some of that in a minute. Okay, what does automation do? Okay, so it improves the quality, the impact, and the assurance level, and reduces the effort of the audit. Company-wide coverage, access to hard facts. In fact, what we found is, in the audit process we'll talk about later, you have this process where you go in first and you do a risk analysis before you do an audit. Well, if I have hard data, I can skip a lot of the audit, because I can say, on the accounts payable, on the three-way match, I checked this data and it looks okay. Let's not audit that. But there's something suspicious over here that Sally was doing. We better check that area out in more detail, because something doesn't look right there. So now I can scope down the audit. If not, they're going to hand you the audit program for, accounts payable, 240 pages, and they're going to say, Anna, here's what you got to go do over at Siemens there. And you have no data to say, I don't need to do this whole thing. So we use it even before we start auditing to see what we're going to audit. We did this all the time. We eliminated huge amounts of travel, and we got to do the more interesting parts of an audit, because we could show ahead of time with data that where the risk is. We're always addressing risk with auditing. We only have controls where we have risk. We only have risks and opportunities that are linked to business objectives. Okay, so improved audit productivity, better scoping, reduced travel, easy user interface. By the way, how many in here really would love to go on a road and just see the world? Is that something? I'm curious how many. Some of you have already seen the world, right? Yeah, okay. Yeah, it's good to get out of your system. I mean, it's good to do it. It really is. And you know what I love about travel? I love culture. The Eiffel Tower looks better in National Geographic than it does in real life, really. But I love to go to a little cafe in Shanghai and meet a guy there that's 56 years old and has been an auditor his whole life, or an accountant, and talk to him about what life is like living in China doing this and what's it like here. That's what I love doing. I love to meet the real people. I don't even like to stay in the Berlin Marriott, because you know who's in the Berlin Marriott? A bunch of Americans, yeah. You don't really meet the people, So I love, when I travel, I love to go to the little cafes. And I was in Bangalore, India, and this guy was taking me to these malls and stuff. They were just like the U.S. malls here. And I want to go where the people are. So we went down to Commercial Street in Bangalore and hung out with I saw the people up on mattresses selling saris and things, and the real people are there. And I got to know what their culture's like and how they live. That's what's interesting about travel. But anyway, you don't want to travel for 7 years 80% of the time. You have no life. And you live in airports, and they're not that much fun anymore, because they search you 3 times before they let you on an airplane anymore. So, easier user interface, increased reliance. And by the way, what we wanted, Professor Lou and I and Tiffany want to demonstrate to you is these tools are not hard to use. Okay, you don't need to be an IT person. We have one IT guy here. But you don't need to be an IT person. And I'll share some stories we've done at Siemens with automation where we had no IT people involved at all. IT needs to help deliver normalized data to the process. But after that, running these tools, as Professor Lou's going to show you, is not hard. This is like, Excel on steroids. And that's what we want to show you, that using these tools is not hard to do. Reduced client effort. I used to get hugs by the CEO or CFO of the companies saying, thank you for this audit. We didn't have to do anything, because I'm not going in and saying, we're doing this accounts payable audit. I'd like to see the last 400 invoices that you paid. I'd like to see all your shipping regs. I'd like you to get this, and the other thing for me. And by the way, when you do an audit in the Big Four, a little secret I'm going to tell you, that helps a lot when you do go and interview people and ask them for information is the first thing you do is walk in the door and say, hey, before we start this audit, I'd like you to put my email on your screen here. It's rod.brennan@siemens.com. And as we talk about stuff, I'd like you to attach it right away to this email, and then we can shoot it to me at the end of the meeting to make it easier for you. And the reason you do that is twofold. One, otherwise the guy says, yeah, I'll get that for you. Get that. Yeah, I'll get that for you. Yep, we'll do that. And then 3 weeks later, you're under pressure to get the audit done, and you have nothing, and you're chasing these people down, and they're gone. And also, it lets you know if this guy really knows where the information is. And let's face it, almost all the information you're going to get in an audit today is electronic. So if he can't find it, he or she can't find it, that means they probably really don't know what's going on or don't know where it is. So if they, and I tell them, I say, I'll wait, take your time, go find it, I'll wait here in the office. And then when you're done, they press a button, you got everything you need, and you get your audit done more efficiently. So, yeah, Robert. Mm-hmm.
And it was frustrating for everyone involved because if you're a construction manager and you get this questionnaire, you're going to answer it as quickly as possible.
Right.
And then when I'm trying to do my job and I get it back and I've got these kind of BS answers.
Yeah.
And also you can't verify the truth. Say is it on time and under budget or with budget? It says yes or no. It's like, okay,
yeah.
This construction project's like 1,000 miles away. I can't verify that.
Yeah.
So to somehow automate a process like that would make it easier for all parties.
Absolutely. And they love it because they're not running around doing all this stuff, I mean, there's a few things, because I was a controller, and I would get for years, and I'd get audited, we had all kinds of things to kind of throw the auditors off. One is information overload. You come in and we just dump binders on your desk and files, that are 400 megabyte and tell you it's all in there, go find it, Or it's the delay tactic, yeah, I'll get back to you on that, or, I mean, they do this on purpose. And the higher up you go in an organization, the more likely they're not going to get back to you. So when you talk to the CFO, they're not going to get back to you. And you're going to be held accountable for getting your audit done. And, I've seen people that just get so frustrated because they can't get this information. Where, when we go in ahead of time, we're getting the information. The company does. You're saving the business money because they don't have to go find all this stuff. Good. Any other comments? All right, we talked already at length about preventing fraud and bribery and attracting and retaining talent. We have people that leave auditing because either they're traveling too much or this isn't what they signed up for. I didn't go to school for 4 years and 2 years in a graduate program to sit in a warehouse at 2:30 at night and tick and tack, count boxes and stuff. That's not why I went to school. So let's do the stuff that's more interesting. It's a lot more interesting doing forensic auditing, and figuring out how the mind thinks and what people might be doing. And by the way, this never ends. It's like cyber terrorism. As soon as you close one gap, people are thinking of where's the other place I'm going to do something wrong. So it's never ending. And that's why you're not going to lose your jobs because you automate. You're going to have more interesting jobs. Okay. All right. I like this chart. This is used with permission by Approva Bizrite, which is one of these firms that we're not going to cover their software, but they use. And it just shows how the cycle works here. So in a typical, this is business risk and this is time. In a typical audit, the business risk goes up, okay? Then the auditors come in and audit, and the business risk drops down for a while, and then it opens up again. And this happens especially with IT audit, because IT controls. Because what happens is whenever there's a migration or an upgrade to a system, we open the system up because we got to get the job done. There's new feature, we open up super users, give everyone access, and then we never close it down again because it's working, And so this is a constant process that goes on. It's very expensive, and the business risk just continues to rise over time. When we put in continuous monitoring, continuous auditing, continuous risk management, the efficiency of the process goes way down, and the cost to control goes way down. So I'll share an example in a minute where Siemens, we have 100 controls that we monitor for accounts payable, because that's where bribery happens, every single day for 869 companies on these 100 controls with closed-loop escalated alerting, and we do nothing. because this system monitors itself, and anybody is an idiot to try and do anything wherever these controls are covering, because you're going to get caught immediately. And within 3 weeks, if you don't act on it and it's not resolved, it'll be on the CFO desk in Germany of Siemens. Very effective, yeah. Well, yeah, and we'll talk about that too. And what's interesting is the fixed cost of implementation for this kind of technology is not very much. It's not that high. These systems are not very expensive. You know, for example, we put in an automated software in just one large division. It cost $200,000 fully absorbed to put it in and train and do everything on it. And the first time we ran it, we found $700,000 of duplicate invoices that we had not known about. That means we paid out, you know, so it paid for itself threefold the first time we ran it. You know, so now we're going to talk about the barriers, and one of the barriers is that we have such disjointed systems. You know, we have SAP doing this and Oracle doing that and a homemade system doing that. So the normalization of the data is very difficult. Okay. So gut check, are we following all right? Good questions. Keep asking the questions too. Okay. Okay. So PwC study recent. Continuous auditing, when they asked CEOs, CFOs what was important, this is what they said. They said continuous auditing and monitoring, 95% of them. Fraud detection, audit operational efficiency. Huge pressure. I have Ernst & Young, who's our auditor, coming to me constantly saying, Rod, help us automate more of these controls, because they get a fixed fee. And think about this. Normally, the revenue model for Big Four or for accounting firms is based on what? It's based on billing out bodies at an hourly rate. So that discourages you from using technology, because the more bodies I can send into the company at a good hourly rate, the more money I make. But if you can so they need to change their revenue model to bill on engagement. But in the case of big companies like us, we pay a fixed fee for the whole Sarbanes-Oxley, the whole financial auditing topic. And so now they're coming to us saying, you know, we want to get more efficient. We want to use this technology because it's the only way that we're going to be able to be profitable in the future. They know that, you know. Not to mention they got millenniums like you guys coming in saying, you know, I want a work-life balance. I want to have a life. I want to use, I do everything I do on technology. I was raised on technology. I want to use technology to do this stuff. You know, and they say, no, you know, take the ledger sheet and go tick and tack, and that's not what you want to do. Okay? This is another study by KPMG. Majority of companies are challenged to automate manual controls and are much less aggressive in moving to reliance on company controls. There's a huge barrier to this. The adoption is happening, and we right here in Rutgers, right above you here, have a symposium in November that I encourage all of you to attend, where we're going to have speakers from all over the world, practitioners, regulators, Big Four, software companies, and you know, I want you to hear what's going on. And it's amazing how slow, in my view, the adoption is. In fact, when I did my PhD thesis in this topic, I was like, I can't believe we're not doing this stuff. And again, for me, it was motivated by personal reasons, you know. But I'm like, well, what's the holdup? Let's go. And that mantra is still going. I mean, we're making progress. And this university is leading here with researchers like Dr. Lou here and others. You know, they're leading this, and it's frustrating, isn't it? I mean, are you happy with how fast it's moving? Yeah. Okay. So when we talk about this idea of continuous monitoring, auditing, what are we really talking about along a continuum? Okay. Well, you know, and that's the thing. It's a little amorphous. You know, what does it mean? When do you know that you've reached nirvana and you have continuous auditing? So it starts out with automation of financial systems. That's just the things we put in place that you know, the SAPs, the Oracles, the automation that we have in our closing systems. Networking, of course, is popular. Audit workflow automation. That's where we use tools like Auto Audit and Teammate that automate the audit process. So you have electronic work papers that consolidate some of that stuff. Then you move across here and you start to extract data and do data mining. Okay, everyone knows what big data is. We're going to have a guy talk about big data. So that's great, except remember, when you're just data mining, if you don't have closed loop alerting, escalated alerting, then you have more work to do because you find things, now you got to dig deeper and deeper. And sometimes that's appropriate in continuous auditing in order to scope your audit. But you can't just mine tons of data and hire tons of people to look at data. That's not efficient from an auditing standpoint. So then you get, exception reporting. Dashboards are real big. A lot of the softwares now are trying to come up with dashboards that I can sit there as a CFO. I'll show you one we use at Siemens, and I can say, okay, there's trouble over here. This company looks good. The controls are good here. Now that gets a lot of attention, but there's got to be substance and design behind the dashboard, or it's not really adding value. Okay? So then, we get to real-time reporting. And by the way, Dr. Vassarelli says this, that probably the biggest motivator for this is not going to be auditing, because audit departments don't have money. It's going to be real-time reporting. I think you guys had a case that was done in the Harvard Business Review on Cisco systems, on how they went to virtual reporting. Did you do that case in one of your other classes? It was Cisco systems. They went from a 14-day close to, in your IT class. Okay, yeah. You went from a 14-day close to 0, and they did it by using analytics and automation. They had some problems because they got sued later because they made bad decisions, but that's the idea. Because I'll tell you this, if the investment community knew that we could do real-time closes, they would have huge pressure on companies to do it. And the reason you don't have real-time reporting is because mostly of the time it takes to provide assurance and audit. Right? It takes so much time because we're doing it manually. So just think about how that would change the dynamics if we could close the books on the first day of the month in every company and do 20 Fs and 10 Ks and 10 Qs the day after the close. What would that do? They say it cost $1 million a day in a Fortune 5 company to delay a close for every day that it takes you to close. You save $1 million a day. So, it would be well worth it. Okay, so a little bit about some of the things we've done. And again, the tipping point, the trigger for the company I work for us getting into this was the fact that we got in trouble. We had a corruption issue. Okay, and what happened was that the regulators, Deloitte and Touche, Deloitte was the investigators, and Devin Boyce, the law firm, one of the questions they asked is, what are you guys doing with technology? They asked the question. So we said, we raised our hand, said IT was in the room somewhere. They said, IT, go develop an automated auditing system, because it sounds like IT. But by the way, that's a mistake, because IT is not the ones to develop this, because they don't understand controls in the control environment. They're the ones to provide the governance for the technology, but they're not the ones to implement this. Okay? So what we did is it was in the business. We had a lot of audits with segregation of duties. Everyone knows what segregation of duties is. That's making sure that the person paying the bills isn't the person authorizing the bills, that kind of thing. And there's so many permutations and combinations that you can't do it manually. So that's where a lot of these softwares were birthed from, was segregation of duties technology, ACL and some of the others. So what we did is we developed some systems coming out of this where we're monitoring, as I said, 869 consolidated companies every day in real time on population data with a dashboard. I'll show you that in a minute. We did segregation of duties in 6 of our sectors, purchase to pay in 2 large companies, travel and entertainment expense. Travel and entertainment expense is high likelihood, low impact frauds or problems. Okay, meaning it's not huge if you add $25 to every meal you have or pad your expense report. It's not a huge impact. Although if everyone does it, and someone who mentioned culture earlier, culture. Okay. So you have a culture where I'm an executive and I have 45 people reporting to me, and every time I go out to dinner with my colleagues and customers, I buy a $200 bottle of wine or 4 $200 bottles of wine. Well, what do you think the people that work for me are going to do? They're going to go order $200 bottles of wine and abuse the system. Or I'm going to stay at the Marriott luxury suite instead of the regular room and so everyone who works for me is going to do the same thing. So it becomes the tone, it becomes the culture, And I'm going to look the other way when people do, he's a great salesman, so I'm not going to worry if he, goes to all the Yankee games and rents a booth and spends a lot of money because he's a great salesman, but I'm violating the policy of the company, okay? So then that creates a culture that says this is okay. And then when you get, 300,000 people that are abusing it, now it could be significant. But T&E is usually not a big one. Earnings management, the average impact is $1 million or more of earnings management abuses. It's much smaller. Order to cash, we have GL and finance, okay? And what we've done here very effectively, and I've been a part of a lot of this, is I actually took some of my auditors when I was in the audit side out of the auditing group in order to work on some of these projects because I wanted them to learn it so we would learn how to do this stuff in audit. Because it was the business, it wasn't the audit group, because the audit group didn't have the money. The business had issues that were outlined by public accounting or by problems in the business by internal auditors or external auditors, and they had to address these things. The audit department, we set up a data analysis forensic technology center. That's the people that come in and take your hard drive and crack it and do big data analysis and some of that. That's forensic technology group. We have that. And we took audit action sheets from an automated audit, IT audit, that we used to do manually, and we automated that for every company. I mean, it's amazing. I mean, we used to sit there, and even though it was automated, we'd go /N SA38 and check this on this system in SAP. But we have almost 300 SAP systems, over 200 SAP systems. So it takes forever to do that. Where I can write one analytic, run it across every SAP system, and monitor that system. Okay. So this is just an example of what we do. Also, in SAP is a tool called AIS, Audit Information System, that is an automated. I want you guys to learn SAP because 60% of the Fortune 5 companies in the U.S. and around the world, you go in the airport, they say, Adidas uses SAP, Porsche uses SAP. Use SAP, and and they use it for everything, for accounting, controlling, logistics, HR management, investment management, financial services. It has company level modules, industry standards. And Siemens, we're SAP's largest customer. We have over 150,000 users because German company. And it's an amazing tool. I mean, you can do anything with SAP. And it's really not that hard to use. And there are no experts in it, okay? Because everyone learns one part. I am HR, payroll, salary payroll, and I'm crack at that. The best people in the world at it are people from India and Germany. The consultants. They used to bill out at $350 an hour if you want to really make money. But great thing to learn. Got me a huge boost in salary because I knew SAP. I came to Siemens as an SAP consultant. And I only worked on the financial side, the FI side. I didn't know anything about some of the other things. But anyway, within SAP, they have a module called AIS that was developed by the Big Four firms and SAP. And interestingly, it started getting so good for doing auditing that SAP, the Big Four, abandoned it. And SAP did too because of liability. The Big Four, and a guy from SAP that developed it told me this. He said they abandoned it, SAP abandoned it because they had liability, because they were taunting it as what you could use to be compliant with Sarbanes-Oxley. Everyone knows what Sarbanes-Oxley is, right? By the way, if I say anything, acronyms, I'm acronym, if I say any acronym that's local to Siemens and you don't know what it is, PCAOB, XBRL, I want you to raise your hand and say, wait, explain that, okay? Because I'm assuming you know all this stuff, and it's not embarrassing if you don't, because you just might not have had it in a class yet. So don't hesitate to ask, okay? But AIS was concerned that if they said our software helps you be compliant with Sarbanes-Oxley, that there would be liability, that you'd come back later and say, we're suing SAP because we failed Sarbanes-Oxley and we were using your software. And the Big Four, they abandoned it because they thought it was going to take away their jobs. Because this thing has in it, it has business audit processes for financial statements, balance sheets, segment reporting, consistency checks, profitability, sales orders, and it does basically an automated audit. And you can put this in your work stream and run this on a continuous basis too. So I know some of the folks had to leave to go to that thing there, and I want to make sure. So we need to finish here at 12:30. Is that right, Michelle? 12:30. Okay, so 12:15. Okay, so we'll do that. So okay, so this is a tool that is delivered with most SAP systems, and most people don't know it's even in there, including audit departments. So they're still going and auditing around the system, outside the box. Okay, problem. All right, someone asked before, what about the investment here? Okay, this is actually just a sample of an investment for a large firm. Okay, I changed the numbers a little bit, but it's about right. And what we did was here we looked at only out-of-pocket savings. Okay, things like reduced compliance cost for the audit department, reduced compliance cost for the business. Okay, that means because I'm using technology, as an auditor, I don't have to fly all these people around. I don't need as many people maybe, or my cost, I mean, what's the cost in an audit organization? It's mostly people costs, right, and travel. That's the cost of an audit department. It's usually not chairs and tables and buildings, you know. And then reduction of external audit fees, because if I improve the efficiency for the audit department, then the external auditors are not going to have to do as much work. So in any company, you have, you know, three basic lines of defense. You've got the business and the internal control environment. You got the internal auditors, and you got the external auditors. And the goal of all of them is to improve and assure a good assurance system to address risk in the business against business objectives. If that's really good and has a lot of automation in it, then the internal audit people have less work to do, and the external audit people have less work to do. So when we looked at just this, okay, just these three out-of-pocket costs, and we look at the cost of putting in a system, and this was for a worldwide international company system, about $7 million for the whole system, the whole installation, and internal resources. We got a net present value with a payback within 1 year. And then over, almost $30 million savings over 3 years, okay? But what we didn't include in here was, remember I said earlier that fraud is 5% of revenue, okay, in the average company, based on 2,000 actual fraud cases by the ACFE, Association of Certified Fraud Examiners. Now, if I take any part of that as impact on that we're going to save, because by the way, if you save $1 in fraud, where does it go? It goes right to the bottom line. And the injustice of it is that who gets credit for that? Not the audit department, because it flows through to the business, right to the bottom line. You need to generate $1.30 or more in sales in order to get $1. You save $1 in fraud, it goes right to your bottom line. Okay, but so if you don't believe that it's 5%, and by the way, the fraud I just mentioned to you in Siemens with the remediation, the fine and the remediation cost was almost 5% of our revenue for 1 year. Okay, so and that's only one fraud, and that's only one category of fraud. But let's say you don't believe it's 5%, then cut it in half, okay, and cut it in half again, and then cut it in half again and again. And what we did for this P&L here is we said, let's just take 1/2 of 1%. Let's say by creating this perception of monitoring, all we do is stop 1/2 of 1% of the fraud. Look what it does to the financials. It goes from $29 million savings over 3 years to $866 million savings in a large international company. Now think about that. You know, I mean, just 1/2 of 1%. I think that's hugely conservative. And Dr. Vassarelli makes the point that if fraud is 5% of revenue, mistakes and inefficiencies are probably another 5%, which this also addresses, because I can use monitoring to make sure that you're following processes, that people are following processes. And that's even more valuable than the control thing, because what happens in companies, in big companies, people follow the informal process. The path of least resistance drives rivers and men crooked, because we take the easier way and we use the informal system, therefore we're not compliant or we're not efficient sometimes. Okay. Now let's use an actual case study here. This is Wells Fargo. They have 3,000 branches, right? And so they embarked on an automation process just to address some controls in their branches, never mind the whole system. Okay? So what they did was they used to, under the traditional method, they used to go out and audit 600 of those branches each year. That's a sample, okay, of 3,000. And under the new system with the automated monitoring, they cover all 3,000 branches, all 150 controls or whatever in 3,000 branches, okay? 500% increase in coverage. All right? Then hours spent by auditing, okay? They used to go out to cover 600 branches and spent 2,600 hours with 15 employees in order to just cover one little section of the branches. Now, with the automation, they cover they only spend 2,500 hours because it's all automated. All they got to do is look at the exception reports where they have exceptions and cover them. So that's a 90% decrease in audit hours. Reports, they used to write, every audit you do, you go out and you write an audit report. That's 600 audit reports. Now they write a total of 8 audit reports. They do a couple of summary reports, but they audit the whole thing and they write one report on the whole thing. Another huge savings that that the automation provides. And then they had 15 people doing 600 of these locations. Now they have 2 people that do a more thorough job on a population basis of 3,000. Okay. And think of, is there anything more commoditized or easier to automate than branches of banks, right? What, they're all supposed to be following the same process. It's the same bank. It's the same regulator. It's the same, Basel II requirements and financial accounting requirements, okay? So, it's a perfect place to put this in. Now, the other 13 people can go out and look at the main branch and find out where people are doing more sophisticated frauds. Does that make sense? Okay. Gut check, are we okay? You following me here? Okay. What are we doing on time? So 11:15. Okay. I need to give you a break. So quick question here. This would be a clicker question. I'd like you to just raise your hand or, so what is not a benefit of continuous auditing, and or continuous monitoring or risk management, CACM? Is it which is not a benefit? Is it population data review is not a benefit? Lower level of audit precision? Real-time or near real-time feedback? Auto alerting? Which one of these is not a benefit? Yeah. The second one, right. Because we'll talk about that later. The precision of the audit precision is the level of control precision of an analytic or of a control. And that's how well is it addressing the risk and the assertions in the control. Okay. All right, so let's just take a look at, I mentioned earlier, we have a program where we look at these 100 controls that include SOD, computer controls, banking controls, money laundering controls, just a whole bunch of controls. And these are monitored every day for every company that Siemens fully consolidates. Okay, and you don't have to do anything. Once it costs money to do this, but once it was set up, it's monitoring all of these things. So if anybody performs a service acceptance without a process outgoing payment, it's gonna nail that. So you're an idiot. And what's interesting is we've changed the behavior. People don't abuse this anymore because they're being monitored. Now, are they doing other things? I'm sure they are. But in this area, we get very few exceptions here at all. And usually if we do, it's because it's a new employee that missed something or made a mistake. It's not a blatant fraud. Okay? And so what the CFO of the company can do is each one of these dots represent one company of those 800 or almost 1,000 companies. And we have a formula that was developed by PwC as a consulting. That's a risk formula. It's actually more complicated than it needs to be. And what it does is it says that any company that has these 3 or 4 things in combination going on, we want to take a look at more closely. And so the CFO and if I was the CFO of one company, I just have one dot here, and it's either in the green area or it's outside the green area. So this would be a dashboard example, okay? And there's more, high-tech dashboards that you can see, okay? And so then I click on that, and I get, this particular company, and it's going to tell me where I have problems. So I have POs created on or after the date of the invoice receipt. That's a problem, okay? So I see that I've got an occurrence of that in 188 in review, and I just made these numbers up, and now these are going to be monitored, and they're going to be monitored every day, so that if someone doesn't clear that up and give a valid explanation as to why it happened, or correct it, or investigate a fraud around it, it's going to stay on there, and within 3 or 4 weeks, it's going to be on the desk of the CFO of the company. So it has that's this point that you want to remember for the test is closed loop escalated alerting. That's this idea that we're not just monitoring things, but we're changing behavior because we're going to act on things, okay? So if I, bring up a porn site on the computer here, someone's going to know that immediately, and Rod's going to get reprimanded or fired or whatever for looking at a porn site, okay? So same here. If anybody has a PO that's created on or after the invoice date, they're going to have to go in and explain that, and if they can't explain it, they're going to take the consequences for what they did or whatever. Could lead to discharge from the company even, and that's going to happen, and this does not come off of here until that's solved. That's really important, because otherwise you as an auditor now, instead of hoping you're going to find something with your non-statistical sampling, you're looking at 10,000 problems and not knowing what to do with it, and trying to investigate 10,000 problems. And we had that happen. We had where an auditor put in a T&E system, and we found so many things wrong that the auditor just threw their hands up and said, I'm just going to go get on an airplane again and fly around and do sampling, because there's too many things here. I can't deal with it. I mean, that's how much you find. That's what's so amazing about this. You find the most unbelievable things. In fact, we're going to have you guys work on some actual company data in T&E later in the class, and I want to see what you guys can find, where there's problems, and we're going to use this oversight tool to do that. Okay, so it's interesting what you find, and it's shocking what you find, honestly. All right, and then we also, because of this, we know what each system is and how much activity is in the system. So there's a lot of other benefits. We can do risk ratings. We can, monitor our systems that we're using and how efficiently they're working and how many transactions are being made. So I can go in and I know that, the companies we ought to look at and maybe monitor or look at more closely for other types of fraud are these companies, because they have more activity than other companies. Okay. Here's another system that we use. This is a product that we purchased from a company called First Strike, and this is for payables. Okay, and we run this out of our shared service center. And what this does is it takes vendor payments, invoices, and employee data. It takes things, third-party things like prohibitive listings, private mailing listings, prison addresses, FBI most wanted, those kind of things. It takes scam vendors, high-risk addressees, proprietary algorithms. These are things that are gained from consulting firms and stuff. And then we take every invoice that we pay, every one, and we run it through this First Strike tool that forensically looks for fraud of some kind, okay? And what it does is it runs all of these tests, and these are things that create risk, like initials in a vendor name, high-risk zip codes, employee vendor matches. So the employee address is also a vendor address. That's a risk, okay? Scam vendors, no POs. Who knows what Bedford's Law is? Do you guys know what Bedford's Law is? That's an interesting research guy named Bedford that did this research that showed that in any random group of numbers like PO numbers or accounts receivable numbers, that lower digit numbers in the first or second position occur much more frequently than higher numbers, such as single digits, 8s and 9s. So 1s and 2s and 3s occur much more frequently. So if I go in and look at a data set, they have statistics of how often they appear that way. If I go look at a data set and I see a substantial number of the numbers that begin with 8s and 9s and 7s, then I know that someone's manipulated that data probably, and it's potential fraud. So that's what Bedford looks at. It's used a lot in forensics and statistics and stuff. So, okay, my math major, where'd she go? Okay, she may know. She might have known that. So, all right, and then what we do, and this is interesting, so then we put a weight on any of these things. So we have a cell phone number, then you can find that out. The vendor only has a cell phone number. That just raises a flag. It doesn't mean something's wrong. But if we have a prohibited vendor, a vendor we shouldn't be doing business with, that's 100 points. A cell phone is 50 points. A high risk or initials in the vendor name is 20. And an employee name that matches a vendor name is 150. And then what we do is we say, okay, our risk tolerance is 150. If we see any transactions that have a score of 150, we want to pull them out for closed loop escalated alerting, okay? And then it pulls those out, and that's a potential risk vendor. Then they actually use Google Map, and if they see a vendor address that matches an employee address, okay, and you wouldn't believe what we've seen here. We've seen, vendor employee addresses that are prison addresses in Toronto, Canada, and match a vendor address. And then you go and look at the single accounts payable clerk who lives in this mansion in Boca Raton, Florida somewhere, and you start to wonder what's going on here. So they use visual things too to look at where the person is. So this is really effective. And here again, at first we found all kinds of things and we investigated them. Some people lost their jobs. You know what we find today? Nothing. And there's even managers that say, well, why do you keep using this tool? Let's shut it off. It's not doing anything. No. It is doing something. It's stopping its changed behavior, as evidenced by, on a population basis, we're not finding anything anymore. So you're an idiot if you're going to go in and violate one of those rules. You're crazy, because you're going to get caught immediately with technology. Where if we were just doing sampling, you could do that for years and you probably wouldn't get caught. And if you did, you can run. But so no. Now, do we have everything covered? No. There's other scams that people can do. But you start to put in this technology, very low cost once your initial investment's finished. Okay. So where am I at here? Okay. Then and also, it's interesting today, and one of the research students here did a lot of work on this using apps. A lot of the technology is now on your on your cell phone here. You can download apps for doing audits of all kinds, safety audits, financial audits, and eventually we get to the point where we just put those apps together. So you can suggest this when you go to work in the firms. Why don't we just use application audits and not spend money on huge expensive software? And the apps are some of them are free. So here's a construction hazard audit, a fleet vehicle inspection audit. You can pull these right off the internet, access your data, run them through your data, and do an audit from your cell phone. That'll get people's attention, huh? Instead of trying to invent it yourself. Okay, so what we want to envision here and what we want to move towards is where we have one tool, okay, with normalized data, and we're going to talk a lot about how you get to normalized data, because you got to make sure if you have multiple systems and you have a data warehouse, and you can get the data in there, now you can audit everything from one place. Also, SAP has a new tool, and we're going to have SAP in here, the second or third to last class, and they're going to tell you about a tool called HANA, which is SAP's in-memory analytics. And what it's basically doing is it's taking your hard drive and everything on your hard drive and keeping it in RAM memory and then running real-time analytics against the RAM memory. So everything's in RAM, so everything's instant. There's no, getting data. It's revolutionizing the not just the audit, but the reporting field too, because it's and what it does is it uses optimization technology so that we don't have to store things on disks and files, and you store all your data in real-time memory. You can do everything instantly, and it's been a big hit for SAP. But so now I have business managers, financial managers, auditors, internal and external, internal control people, all using the same system. And we do that today. We give E&Y access to our data to run analytics so they can improve their efficiency of their audits. Okay. So again, this isn't rocket science. This stuff is not hard. It kind of makes sense. Why not? Where what we don't want to do is we don't want the business managers to go develop a system, the financial managers to develop a system, external auditors systems, internal auditors a system. And by the way, when you get into the firms, by the way, how many are going to the firms? Anybody already going to work with the firms? Yeah? Okay. Okay. And again, I encourage that. I told the story about my daughter, but my brother is a partner with Ernst & Young. Anyone going to Ernst & Young? Yeah? No. Okay, you are. Okay. Look for Tim Brennan. He's a partner there. Yeah, he's actually on, anyone going on the tax side? He's on tax. Yeah, okay. But good, great firms. You know, great experience too. But you guys got to help change it, okay? So, yeah. Okay, so just want to talk for a minute. This is a little review of your audit. I want to give you guys a break here too. My gosh, huh? Maybe what we'll do is let me go through this quickly. We'll take a little break, and then we'll do the energy management. Does that sound good? Yeah? You guys look like you can use some energy, huh? What I love is I come in this class and no one has a tan. You know, everybody, you guys don't get out in the sun, right? You know what I mean? Right? So yeah. So in auditing, when we did this study, when we were doing this automation at Siemens, you have 5 basic steps in an audit. You plan, you do field work, you do reporting, you do wrap up, and you do follow up. Okay, and of those, and these are functions down below that. And this is based on a little study we did at Siemens of what % of the audit is each one. So 20% is planning, 54% is the field work, 11% is reporting, wrap up, and follow up. Then we marked in blue here the things that automation can help with. It can't help with everything. You know, automation isn't going to write your audit report for you, okay? Although it'll allow you to do one audit report instead of 50. But individual risk assessment, this planning part, really important because it's going to allow you to do a good part of this using automation, because I can use data to scope down my audit. So if I have this 400-page audit and I don't want to have my auditors have to do 400 pages, I can use analytics to say we only need to do a third of this audit because we see the risk now. We can quantify it with data. Okay, and then of course the analysis, reconciliation, quality review. The reporting, not much help from automation. I mean, you can take the report from the last audit and copy it in Word, but that's not really automation. Wrap up, that's all meeting with the staff. And by the way, I'm not discouraging you. You still want to go out and meet the people you're auditing. You want to read the tone in the middle and the tone at the top, but you don't got to hang out there. You don't got to be there all the time to audit. And then ongoing monitoring. So what we found was when we did this study, we found that about 60% of the typical audit process can be automated, without changing anything, just by putting in technology. And the most important part is probably this whole planning thing, okay? So, so the impact that you have, personnel and travel is 76% of the average budget. So for example, I have a large international company with 400 auditors, and the sunk cost of, fully absorbed cost of an auditor is probably about $200,000 a year. And you're saying, wow, they're not paying me that much when I'm starting, okay? But if you take travel, burden at 30%, salary, any other overhead, it's about $200,000. And if you don't believe that, I've signed travel report expenses for people that did worldwide travel that made, I don't know, $150,000 and had $230,000 in travel costs, because they were flying all over the freaking world to do audits, in 1 year, $230,000 just for hotel, meals, and entertainment, that kind of thing. So that's the big impact. So what we did was we took scenarios and we said, okay, a traditional audit, I'm going to make an announcement, conduct the audit risk assessment using old audit reports, requested data, interviews, and phone reviews. Scope the audit based on risk, often limited by old or unavailable data. Prepare an audit planning memo, a kickoff meeting, prepare the audit scoping memo, etc. Okay? In a continuous thing, I'm going to take an audit team, use real-time control monitoring and dashboards containing hard facts covering the specific entities and the audit programs and scope as the basis. The audit team creates individual queries and rule sets to perform specific analysis and transactions, get direct access to the system, drill down the entity and the IT systems to validate risk. So I'm going to go in ahead of time, and I'm going to see where the risk is, and I'm going to say, okay, and I'm going to document this is why we're doing only these parts of this audit. Now I've reduced the scope without impacting the risk. Remember, audit is always based on risk. And AS5 said that we should do risk-based audits. So I'm only going to audit and run analytics on the things that, because of having data, I'm going to scope down the audit significantly. Okay. Another example, and this is an actual case where we had an InfoSec flaw in our Oracle database that basically we had all these controls in SAP that locked the front door, but the back door was wide open because at the database level there was an InfoSec problem. Okay, and so we did some analysis to find out that that was affecting 160 or something of our 800 companies. So under the old practice, we would have gone out and said, okay, let's go out to these 160 companies and find out what's going on and do an audit and fly all these people out there. We said, no, that's ridiculous. We know what the problem is because we use technology to find it, and we're going to do some planning, skip the field work, skip the reporting, skip the wrap-up, and let's just do the follow-up. So we basically did the planning. We sent out a note to all of these, an alert, closed-loop alert, saying get this fixed now to 160 companies, had them fix it, wrote one report, didn't even write a report, just made sure it was fixed, closed it up, and the whole thing's done. So what we did was we eliminated 70% of the audit cycle, okay, just by using automation. So you got to think differently. Otherwise, under the traditional model, we would have went out to 160 companies to investigate this problem and dealt with it, okay? Waste of time. This is where we, so that's the, that's just summarizing that. We eliminated them. Okay, then we have, this was these automated sheets. I'll skip through this a little bit. So let's talk for a minute about barriers to change. What do you think are some of the barriers to change in audit? It's too intrusive, too expensive. You mentioned that. The skills, risk of independence is an issue. The Big Four sometimes say, oh, we can't help you guys with that because we're going to violate our independence, which, by the way, is not true because they violate their independence if they give us the controls. But if all they do is help us develop a system to monitor the controls, that's not a violation of public accounting independence. Other ones are inadequate restrictions, access, modification of software. We sometimes put intelligent agents on to extract the data. Well, what if someone can compromise that agent? Or if the tool, the audit tool that you use, the automated audit tool, it has to be accredited, meaning it has to be safe. Because if I can go in and monitor and mess around with the monitoring tool, that's a problem too. So, okay. And then in your book, I want you, when you do your reading, because most of you don't have the book, I was going to go into more detail on this, but there's some more on page 20. There's some good things about logic or tests must be hard-coded, automated tools and techniques can only be used by IS auditors. It's this perception that it's hard to use. And what Professor Liu and I want to show you is this technology is not hard to use. It's simple to use. Hands-on approach, client systems data will be compromised by the use of the software, or the software may screw up my SAP system, basically, is what it's saying. So there's a good chapter on here. I'd like you to read that. I like some of the acronyms that they use in the book here, like T, technology-enabled audits, or automated tools. So I do want you to read your chapters here per the syllabus, because that'll make sure you have the background for it, okay? So yeah, those are some of the reasons. Here's some of the other reasons that the freaking world is complicated, and we got so many informal systems, and and you'll see this when you get in these companies. You walk in the foyer and everything looks great and organized, and then you start digging into the processes and you find out that this department doesn't talk to this department, and people don't know the end-to-end processes. And then another resistance to change is some of this kind of stuff that the phonograph is of no commercial use. Thomas Edison said that in 1880. Everything that can be invented's been invented. Charles Duell, director of U.S. Patent Office. Who the hell wants to hear actors talk? Harvey Warner, 1927. I think there'll be a world market for about 5 computers. Thomas Watson, IBM, 1943. There's no reason for any individual to have a computer in their home. Ken Olson, president of Digital. I love this one. 1981, I was an accountant in Southgate, California, in this year, working with PCs and Apples, trying to use technology just to do closing the books. And Bill Gates said $640K ought to be enough for anyone. Bill Gates. But today, I want to just share with you real quick. I'm going to give you a bridge version. This is from the Human Performance Institute in Orlando, Florida, shared with permission. Best training I ever had, and I went to all kinds of charm schools on both technical things and soft skills, but this was really good. And this is, again, where they take professional athletes, and now they do it with corporate athletes, mostly C-level executives from companies, and they take them through this course. It was $4,500 for 2.5 days, and we worked out in a gym every day, and we ate organic food down there, and we learned this stuff, and it covers. So, you know, again, disagree with this stuff too if you want, but it's really interesting, and it's something I'm full disclosure, I'm not here yet. I struggle with some parts of this, some parts of it I've done well, but it's really helped me in my career and personally as well. So I won't do this, so I'll skip this. So this is the typical student in the PA MBA program here at Rutgers, where we have a human energy crisis. We don't really have a time management crisis or a stress crisis, because time management, we all have the same amount of time, and stress is a natural part of life, and you can't eliminate stress. You can manage stress, but you can't eliminate it, okay? But energy you can manage, okay? And so just some statistics: disengaged workforces decrease operating income by 33%. This is based on Towers-Watson research, okay? Disengaged employees cost businesses $300 billion a year. Absenteeism, low productivity, staff turnover, accidents, etc. And employees believe that corporate engagement is the key to improving that. 54% of corporate executives are disengaged, meaning their head's not really in the game. They're going through the motions. And there's no worse thing in the world than not to love what you do. If you don't love what you do, don't do it. 65% of employees are disengaged and don't give their best effort, and 21% of employees are toxic, even trying to sabotage. You know, and I've seen some of this. You know, I don't doubt this at all. 62% reported that burnout, emotional and physical exhaustion affected them or their organization more in the past 5 years. 78% are concerned about people's capacity to manage the work demands. Full engagement is the acquired ability to invest your full energy right here and now, and then to disengage, okay? Life is not a marathon. Life is a series of sprints and re-engaging. So I used to look at life as a marathon and try and run this marathon. I'd play tennis with you, and I would try and be on for 2.5 hours and beat you in tennis. And you know what? I wouldn't beat you, because I'm not recovering. You got to recover on a regular basis in everything you do. So quick test. I want you to just grab a pencil and write down 1 to 4 here. True or false? Address these questions. 30 seconds. Go ahead. Let's see how smart you guys are. Just put true, false, whatever. No, you don't have to hand it in. This is the final exam. Okay? All right, you got it? All right, so how many think the first one's true? Okay. Second, true. Third. Okay. Fourth. They all true? How many think they're all true? How many think they're all false? How many don't care? Oh. Okay, well, the truth is that they're all false, right? And I'll show you why, okay? Skillful investing time in things and people you care about spawns harmony and fulfillment. Well, that's partially true, okay? But the truth is that managing energy, not just time, is the key to extraordinary results. And our most critical resource is our energy, and most fail to manage it effectively. So, again, you can manage time, but we all have the same amount of time, okay? So I want you to think about this. I don't know the ages of you, and I certainly won't ask the women their ages, but I'm going to tell you this, that your capacity, this red line of energy naturally, peaks at about 30 years old. Actually, it's about 27 for guys and 25 for women, because women mature faster than men, and so their energy starts to decline before men too. But the demands on your life, you know, you're here in the MBA program. I don't know how many are married or single, but, you know, you're going to get maybe married someday. You're going to have kids. You're going to have college expenses. You're going to get a career. You're going to become a manager of multiple numbers of people, maybe CEO of the organization, CFO of your organization. So the demands on your energy are going to go way up, but your capacity for energy is going to go down, and that gap is what we call stress. That's what creates stress. Okay? And you can't eliminate, you don't want to eliminate stress. Stress actually makes you grow. Okay? So it's managing energy that's the most important thing. The human spirit is fueled from a different energy source than a physical body. False. So the energy that I need to stand up here and teach this course right now is the same energy I need to run a marathon or to have an intimate discussion with my wife or to perform on a tough test that you have. It's the same energy. It's energy. And if you don't have it, you're not going to respond right to your spouse or boyfriend or girlfriend probably under stress. You're not going to do well on the test. You're not going to be able to run the marathon in the time that you wanted to do it. And so energy affects all parts of you, your mental, spiritual, emotional, and physical capabilities. And the only way to build energy is to push yourself to the level of discomfort beyond where you're normally operating. So as an example, if I want to build up this bicep, okay, if I get a weight and I lift, I break down that bicep, right, and then it builds back stronger. If I want to protect this arm from any trauma and I put a cast on it and keep it perfectly safe and still and rested, what happens to my arm? It atrophies, right? That's exactly what happens to you if you try and avoid all stress. You got to value having some stress in your life, and you got to make some stress in all areas so that you improve. Otherwise, you don't improve energy. If you don't push yourself a little bit beyond, no pain, no gain. That's not good because pain isn't good. But discomfort is, okay? So, for example, when I work out, and I work out just 20 minutes 3 or 4 times a week, I do interval training. So I don't just get on an exercise bike and pedal for 45 minutes and read a magazine and drink a cup of coffee. All that does is burn calories. It doesn't increase your energy level. I get up on my stand-up paddleboard I do out in the ocean, and I go 1 minute. I go 3 minutes to warm up. Then I go 1 minute as hard as I can go for 1 minute, all out. And you can do anything for 1 minute. It hurts. Hate it. But it helps build energy. And I do a lot less. I used to run every day. I was a fanatical runner. I ran 5 miles every day. I entered races. I did all this stuff. I had surgery on both knees, wore my knees out. Advanced the aging process. More gray hair, losing my hair. Okay? So it's not, because I thought life was a marathon. No, life is engage intensely and then disengage. So when I'm finished with this lecture, I'm going to disengage mentally as well. I'm going to pull back and just let my mind think about something I love to think about and let my mind relax. Okay? Because that's how you be successful. That's how these tennis players go from number 200 to number 1. When they're serving the ball, they're totally focused, okay? When that ball hits the net by either party, they're trained at this institute to disengage. Just pull back, let your mind wander. Don't start evaluating where you failed, what you did wrong. Just let yourself recover for 30 seconds until that next serve, and then re-engage. That's how you be successful. That's how you be successful in work, okay? Okay? Next one. The best way to think about one's business career is a marathon rather than a sprint. False. Life is a series of sprints in every area, It's a good idea if you're physically exhausted and you don't have energy, don't engage in a conversation with your girlfriend or your boyfriend about something important because you're probably going to screw it up. It's better to wait until you have the energy to do it because it takes energy. It's the same energy you run a marathon with, You ever notice when you come home and your roommate didn't clean the bathroom and you had a rough day, a financial accounting test, and you're irritable and you walk in the bathroom and it's a mess, and what do? You blow up. Where if you had energy and you were rested, you probably wouldn't do that. Okay. So and in all we gotta balance energy with recovery. So we gotta go a little beyond what we're used to build energy and then recover. Okay. So this is the idea that I stress myself a little bit and then I recover, and then I'm going to begin to build my energy level. Okay, do you know that shift workers live 10 to 12 years less than people who don't work shifts because they never get to recover? Okay, that's a statistic. And I had a time in my life where I was an accounting supervisor for Armstrong World Industries out in Southgate, California. And I walked out to my new job as an accounting supervisor. I had 8 people reporting to me. I was only a year and a half with the company. And the controller walked out the door, not because of me. She had a better opportunity. And it was Southern California, very expensive place to live. They couldn't get someone to come out there. So I'm like this new accountant trying to figure out where the bathroom is, and I'm in charge of everything. And there's an audit going on, and it's year-end closing. And so, I said, no problem. I'll just work 7 days a week. Thank God I wasn't married. It would have ruined my marriage. And I was working 7 days a week, 16 hours a day. I did nothing but eat and sleep and run in the morning on the beach in San Pedro Bay and commute to work up the 7 freeway. And I did this for 6 months. And I thought, I told my boss, he said, Rod, we'll hire the big four to help. I said, no, I'll do it. I'll do it, And I was just exhausted. I was so inefficient because I was just burned out. And I had no recovery, And what happened was, eventually, and I thought I was being kind to my employees, but what I was saying, hey, we got to get through this. We'll make it. If you need any help, just let me know. But my eyes were saying, you get moving and get this done. I'm working 16 hours a day. By God, you're going to do it too. That's what my eyes were saying. And one day the boss called me in, the head of the facility, and he said, Rod, I thought he was going to say, hey, great job. Thanks for plugging, man. Really appreciate it. He said, Rod, I've had every employee in here complaining that you're pushing them too hard. And that was an epiphany for me in my career where I said, people are more important than processes. But it was because I was exhausted. I had no energy and I wasn't recovering. Okay. So protecting yourself and others from high stress is an important part of your leadership. False. Stress is an opportunity from growth. Protection from stress erodes capacity. They know medically that if you retire and do nothing, your brain collapses. If you don't do things with your brain, you lose the capacity in your brain. If you don't challenge your brain, I don't like doing puzzles and playing games. My wife loves to do that. I'm starting to do that because I know it sharpens your mind. Things that push us the most help us. No discomfort, no growth. Okay, and this is the kind of thing. If my current energy level is here at 26 years old, and I want to increase my energy level to cover increasing demands, I've got to do something. I've got to push myself beyond physically and other places. And I got to eat, exercise, sleep, and work strategically if I'm going to do that, okay? And this is what we learned at the... So let's talk about a few of these real quick, and we'll get you out of here in time. First of all, nutrition, okay? You got to eat strategically if you want to manage energy. Because if I go out and, drink the energy drinks and they bring me way up here, they're going to let me down way down here. Okay, or I drink too much coffee or whatever. And by the way, we always use the 80-20 rule. Everything I'm sharing with you, 80% of the time do this. 20% of the time do whatever the hell you want, in terms of eating and stuff. Enjoy your screaming yellow zonkers and your chocolate cake and all that. But just do this part of the time at least. So eat light and often. You've heard that. Eat small amounts often, not big, huge amounts. I used to come home from work at night, and this is the place I still struggle, is I unwind by eating. I get home from work sometimes at 8:30 at night, and I'm not hungry, and I go in the refrigerator, and I just start grazing. I'm not hungry, but I'm eating. And what that does is that sends my glycemic index way up here, and then I don't sleep good during the night and all that kind of stuff. And I'm not heavy because I also over-exercise. So I was like turning the heater and the air conditioning up at the same time, where I was out overeating and then over-exercising. So I wore my knees out, advanced the aging process, all that kind of stuff, okay? But eating often small amounts. And you want to stay within a glycemic index. So you want to mix certain foods. So if I eat rice, which is high glycemic, meaning high sugar, I also eat some nuts or something with it because that balances the glycemic index. These guys that do the sumo wrestlers, you know how they gain weight? They don't eat that much. What they do is they skip breakfast and lunch, and then they eat 10,000 calories for dinner, guaranteed to put huge amounts of weight on you and make you heavy. Okay, so you want to mix, and also don't go more than 3 hours without eating. And this is new physiology information too. So because what your body does is it goes into what's called survival mode when you don't eat for 3 hours. It says, Anna hasn't eaten for 3 hours, so she's in starvation mode. So I am going to, when Anna needs energy to take this test in the PA program, I'm going to start burning muscle tissue, not fat, because your body reserves fat for the very end when you're starving to death, okay? So if you don't eat, you send the signal for your body to burn. It burns some fat, but it burns muscle tissue too. And you don't want to burn muscle tissue because muscle tissue burns calories at rest. So I carry around with me just a little trail mix thing. And I just never go more than 3 hours without taking a little bit of this just to tell my body that it's okay to burn fat, not calories when you need, not muscle tissue when you need energy. Okay? And this is all research stuff, you know, and some of it's new type research. Okay? So you want to eat often but small amounts, and that snack just needs to be 75 calories, not more. Okay? And then you do portion size. Okay? So let me see your hand for a second. You know, if you look at my hand, can you turn around like that? Yeah. And look at her hand. If you take this part of her hand, she's a little smaller than me, that should be about a portion size, okay? So just this part of your hand, not piled up that high, okay? And so what you want to do is eat grains, and you can even eat less grains, and you can get more of your carbs from vegetables too, but vegetables and protein in sort of this order, okay? And just, you know, two hand-sized things of grain or vegetables and maybe at least one of protein. You can eat more protein if you want. That's okay too. But that kind of gives you a guideline for your meals. Use the glycemic index. Eat low glycemic snacks. Okay, so these are glycemic. So high glycemic things, as you might imagine, are candy, soda, pretzels, potato chips. Go ahead and enjoy them, but recognize that if you do eat them, you should eat some other things that are proteins or lower to balance that out so you don't shoot your glycemic index way up here and waste all that energy and then be way down here at the bottom. Are you following me? You think this is crazy? No? It's interesting. Huh? So, you know, these are the things that are, you know, so you don't want to fall below here because that's when you're not going to do good in the test, good in the tennis game, have a good conversation with your girlfriend or boyfriend. You want to try and keep your glycemic index in here. And again, 80-20. You know, 80% of the time do this, 20% of the time go enjoy what you like to eat. But interestingly, when you eat things that are better for you, and you start to like them, you know, life and food is about not the sedation of appetite. It's about our culture. It's cultural, you know, and because I was raised and my mama made pasta and I ate pasta, and so that's what I'm going to be eating all the time, you know. So here's what you want to do. You don't want to eat until you're in a food coma, you know, which I do sometimes at night. This is the part I really struggle with. You want to eat until you feel full. If you want to lose some weight, feeling of hunger, stomach growls a little bit. If you want to lose weight, feel satisfied but not hungry anymore. Don't eat. It takes about 20 minutes for your body to catch up with your mind there, okay? And then to maintain weight. Okay, I'm going to do real quick on exercise. I mentioned because I want to get you guys out of here, but we can talk more about this. But you know, again, you know, do sleep strategically, 7 to 8 hours. You guys who say, I only need 4 hours of sleep. No, that's not true. Physiologically, that's not true. You need to sleep, most people, 7 to 8 hours. Okay? And have a ritual before you go to bed. I read. If I read, I get tired, I fall asleep. You know, if I don't fall asleep that easy. If I wake up in the middle of the night, I read and fall asleep. You know, so that's so strategic. You know, these are sort of obvious things. Stand up instead of sitting down. I have a life desk at home. I have a view of the ocean. I stand up and work for 30 minutes, then I sit down. You burn 5 times the calories standing up than you do sitting down. Okay? So at work, we have this new way of working. We have desks that raise up. I stand up a good part of my day. Because when you sit on your butt, you constrict the blood flow, and it actually impairs your cognitive ability when you're sitting down for long periods of time. At work, I regularly never sit for more than 60 minutes. I get up, I take a walk, go take care of a memo or do something, get up and move around. Much better for your cognitive ability, okay? Avoid drive-through beer stations and stuff. Yeah, so some exercise is better than none. Planned movement, stretching. I'm going to skip some of this, but again, if you want to grow, you got to go above your comfort level to build your energy to a new level, okay? And it doesn't need to be a lot. Like I said, I only exercise 30 minutes 3 or 4 days a week. You can do 20 minutes if you do like CrossFit and some of that kind of stuff, okay? And this is just the sets you should do, the body parts you should work, okay? And then emotionally and mentally, again, you got to disengage. You can't be focused on that accounting test for 4 hours straight. You're not going to be effective. Study for 30 to 60 minutes. disengage. Go think about something, sing a song, pray, take a walk, watch a funny segment of a movie, whatever helps your mind relax, okay? And then they talk about the spiritual part of it, and this is important, is that, and the spiritual part isn't religion, it's mission. You all have a mission in life, okay? And if I ask all of you, what's your mission? What are you going to do? You want to accomplish your mission at all costs, okay? And if I ask you what's your mission, Anna, you may say to me, I want to be a great, wife and mother. I want to be a great accountant. I want to be the CFO of my company someday. I want to do all these things. But then our actions aren't consistent with our mission, because if you want to do all these things, you need energy to do these things. And if you're too busy to eat right, you're too busy to exercise, you're too busy to spend time with your kids and your wife and your spouse and your boyfriend and your girlfriend, then you're living inconsistent with your mission. So at all costs, you finish your mission. And I'll close with this story real quick, is in this training center, they have a film of this. They have these 3 football players who you'd know their names. They're NFL stars. And they told them, here's your mission today. I want you to run 1 mile in 9 minutes down to this fence in Orlando, Florida, touch the fence, and come back in 9 minutes. Can you do that? And they said, you bet, man, we can do that. And they said, well, before you start, there's some alligators down here because there's water around, so just be careful that they are not sunbathing, and sometimes water moccasins, but they're very rare. So are you going to finish your mission at all costs? They said, yes, sir, we're going to finish our mission. So they said, okay, on your mark, get set. Oh, one other thing. Sometimes there's wild boars down here, but they're not very common. Okay, you're going to finish your mission? Yep. They hit the gun. These guys took off. They had this on film. They get about 3/4 of the way to the white fence, and they hear a wild boar, and they all stop, big-eyed and going, oh, my gosh. And they hear it again, and they look at each other, and they turn around, they run back to the instructor. And the instructor says, did you guys finish your mission? And they said, no, man, we saw a wild boar. They said, you saw a wild boar? He said, yeah, it was loud. And we didn't see it, but we heard it, And so then they did the same thing with some Navy SEALs and some first responders. And they got down, they heard the wild boar, they stopped, and they moved toward the danger. And they went in the woods about 10 yards, and they saw an instructor with a wild boar call up in a tree. They went down, they touched the fence, and they came back, and they finished their mission. So, and that's what you got to do. If your mission is you want to be the CFO of the company, you want to be a good husband, a good father, whatever your mission is, save the whales, save the world, then you finish it at all costs. And in order to do that, you need energy, and you need to manage energy. So that's the spiritual part of it, is just to have a mission, and very important, write down your mission. Write down what you're going to accomplish.